Has the market bottomed out? By www.options-trading-education.com. After the first of the year stock sell-off, it seems clear that the prolonged rally of U.S. stocks is over. But has the market bottomed out, or is there more to come? Barron notes that the VIX trading indicates a bear market. Despite Tuesday's rally, U.S. stocks and the price of oil are off sharply this month amid signs of a global slowdown. The negative economic news shadowing stock markets has not surprisingly been pushing up the stock market's so-called fear gauge, the Chicago Board Options Exchange Volatility Index, known more familiarly by its nickname VIX. As stocks have fallen this year, the VIX has climbed 23% to its current 22.43 as of Tuesday's close. During the financial crisis of 2008, the fear gauge hit an all-time high of 89, though as Steve Sears, Barron's options editor, has pointed out, the high 40s tends to be a more pedestrian panic peak. So options traders have not panicked yet, indicating that we are not yet near a market bottom. VIX. What is the VIX? According to the Chicago Board Options Exchange, the CBOE Volatility Index, also known as the VIX, is a key measure of market expectations of near-term volatility conveyed by Standard & Poor's 500 stock index option prices. Since its introduction in 1993, VIX has been considered by many to be the world's premier barometer of investor sentiment and market volatility. Several investors expressed interest in trading instruments related to the market's expectation of future volatility, and so VIX futures were introduced in 2004 and VIX options were introduced in 2006. Options and futures on volatility indexes are available for investors who wish to explore the use of instruments that might have the potential to diversify portfolios in times of market stress. The VIX is quoted in percentage points. It translates roughly to the expected movement of the S&P 500 index over the upcoming 30-day period. This number is then annualized. VIX is a registered trademark of the Chicago Board Options Exchange. In short, this panic index indicates when options traders are fearful of large market moves. The fact that the VIX is not currently very high by historic standards indicates that the market bottom is not in sight. What to look for? The market responds to global economic events. So what is going on, and how do these things affect a market bottom? Japan has gone into negative interest rates on bonds. China is struggling with slowing exports, huge capital flight, and a plunging stock market. Russia and Saudi Arabia have agreed to cap oil production in an attempt to stabilize oil prices and help their respective bottom lines. Meanwhile, Iran is going to be pumping more oil as sanctions are lifted in return for Iran giving up its nuclear ambitions. The Middle East is still in turmoil, with a terrorist state holding parts of Iraq and Syria and not establishing a foothold in Libya. Each of these situations will work its way through to a solution, good or bad, but none is going to get fixed very fast. Our opinion is that the market bottom is not yet in sight. For more insights and useful information about options trading, visit www.options-trading-education.com.